TDR, Traded Block Podcast, here in Brooklyn, New York. Thanks for joining in here on the Gonzaga Television Network. I'm your host, Shad Dales. A little bit of delay. We had some technical issues, but regardless, we are here, and it's time to kick some butt as we welcome in, obviously, Nicolas Vita. Good to see you, CEO of the Cannabist Company Holdings. Good to see you. Thanks for having us here in Brooklyn.
Great to be here. Thanks for coming.
Yeah, I appreciate it. Anthony Barrell, what do you think?
It's good. It's great to be here. It's a beautiful dispensary. It's been a busy day so far, and this is the finale.
Yeah.
So I'm ready to get into it.
Yeah. So let's jump into it. Yesterday's earnings.
Yep.
I know there were some important numbers that we outlined. 55% increase in revenue in the state of Maryland.
Yep.
How do you think right now, so far, that investors are interpreting based on some of the results and the feedback you've received in the first 24 hours?
I think they've been very positive. We showed growth in the markets where we needed to show growth. We showed improvement in margin and profitability. We broke even on a cash flow basis. So all the things we've been telling people to expect, we've been delivering on. And we're setting ourselves up for an outstanding 24.
Yeah. So operational cash flow was 1.49.
Yep.
And then adjusted EBITDA was how much again?
A little over 20.
A little over 20. Okay. What would you say, like, when we looked at some of the stats, I know that you had mentioned, like, I think the key thing here is that some of the questions that we found online was people were like, is Florida, like, kind of the focal point of this company? Mm-hmm. And you think there's probably some good ways of describing or explaining to us what is that focal point? What are the states that we're looking at?
Yeah.
And what is, I guess, the primary, endpoint moving forward for people to have a better understanding?
Look, I think Florida is a great market. A lot of our competitors have really leaned into Florida. It's one of the few markets where you can open up as many doors as you want. And so because most of our markets are limited license, people have over-indexed into Florida for that reason. But, we're in markets like Virginia. We're in markets like New Jersey. We're in markets like New York, all of which are turning adult use or have turned to adult use recently. We're in markets like Ohio, which is just about to turn to adult use. And so the way we think about it is we're not one of the largest players in Florida, but we're one of the largest players in 8, 9 other markets, all of which are about to transition to adult use. And that's really where you get the acceleration of the business.
Growth states.
Do you see that incremental growth hitting the top line as these AU markets start to flip?
It's inevitable. I mean, you think about the size of each dispensary in New Jersey, we add one more, and that has a profound effect on our top line. Virginia, which is a big part of our business, right? There are 4 operators. We have over 60% of the market share. We add 2 more dispensaries there. Not only does it affect our top line, but it also affects our bottom line because we've built out all the cultivation capacity and manufacturing capacity ahead of the demand profile. So it's very low CapEx, very high return dollars at this point.
And speaking of CapEx, I mean, what stood out to me was you had an uptick in wholesale business, wholesale business. This quarter. How integral is that into the business strategy moving forward? And are there certain markets that you're looking forward to that part of the business, or is it kind of just an outlier, we'll call it?
So wholesale was actually a fairly large part of our business for a long time, and it basically tapered off when we were in the middle of negotiations with Cresco. The transaction broke, and now we're re-engaging with all of our enterprise level partners. But I think, going back to your point on Florida, Florida is a fully integrated market, so there really is no wholesaling that happens there. When we think about the wholesale business and the way we can leverage arguably the second or third largest retail network in the industry in the United States, outside of Illinois and outside of Florida, but that's really valuable to people to be able to get on our shelves. So, having that concerted effort, actually dedicating resources to it, but then also leveraging our doors in a way we haven't in the past is a great way for us to accelerate our brands, our products, all the things that really drive margin and pricing power.
What do you think of the news last week with Ohio? Because when we talk about 55% revenue increase in a growth state like Maryland, what's that present to you moving forward for Ohio and getting, I guess, investors excited?
Yeah, look, I mean, Ohio is one of the largest and most important markets in the country. We're one of the largest operators there. It's our view that we're probably going to end up with a couple of more, maybe 3 more dispensaries in the state of Ohio.
Okay.
Our infrastructure on the manufacturing side is fully built out. So we have capacity to grow into. And not only that, there are a lot of new licenses being awarded that are not fully integrated. So they're going to need wholesale relationships like ours. For me, Ohio is the quintessential example of what's to come. You had a fairly conservative state. You have a Republican governor. You had an electorate that spoke. And I think that speaks volumes to the entire national outlook. What's even more important is that Ohio is going to be a state that actually enforces its regulations. That's one of the issues we've had in states like New York, where you have a conversion to adult use, but they're not quite sure how to enforce it because there are a lot of implications related to the war on drugs, related to social equity, that are a little bit of a third rail. I think in Ohio, they found a way to manage that very effectively, really support the industry, but also drive the growth of the industry in a regulated way so they can capture the tax dollars, so they can make sure that the communities that want exposure can get exposure, but the communities that don't have to. And I think that's a really important balancing act that we're looking forward to being part of.
I know that you guys broke out the states, your top 5 markets for the first time on the earnings report. Thank you for doing that. It makes our jobs easier and it gives us some insight into the business. One thing that I was surprised of was to see Colorado on there.
Mm-hmm.
What's your take on Colorado? I mean, a lot of people forget about that market, but I mean, obviously it is important to the overall enterprise. And I mean, is it something that people should be paying attention to?
Look, I think, everyone thinks about Florida because that's where a lot of
They do, don't they?
Yeah, they really do, and they should. But guess what's $1.8 billion market? Colorado. And guess what's the most fragmented market in the United States? Colorado. And guess what's one of the best regulated markets in the United States? Colorado. So you think about what's happened in Colorado over the past couple of years. You've seen rationalization, consolidation occur because the markets are efficient, right? They've pushed a lot of people out of that industry and out of that business. That sort of stable footing is now in place. And what we see in Colorado is a lot of consolidation happening. We now, for the first time, have wholesale relationships with other large operators in the marketplace. And look, we're the largest operator in Colorado, and we have less than 10% market share. There's so much room for us to grow there, and it's profitable. And it's frankly, it could be a high growth market if we dedicated the resources, which we are. So we're actually very excited about it because no one else is paying attention. And candidly, being a bit contrarian is how we've always built the business.
Everything that's old is new again in Colorado, right?
That's right.
It's a good way of looking at it. So you got to love the online world. Like, why are they not like top 5 in the state of Florida? Because like you said, everybody is so fixated on that market. And if you get adult use, it could be arguably the largest cannabis market perhaps in the world. But if you're sitting in front of a group of investors, like what's the message and the focal point that you want to communicate to your investor base on the footprint in the states that you're actually building and getting a bigger and bigger market share pertaining to it?
So look, we're focused on markets where there are real barriers to competitors, where there's real regulation, where there's real upside, and where we can really accentuate our differences, right? Our sustainable advantages. Ohio is a perfect example. New York is a perfect example. New Jersey is a perfect example. Maryland is a perfect example. All those markets are growing, head over heels, and we're there to capture that. Many of them haven't yet transitioned, which is a huge opportunity in the future for us. If you look at Florida for us, it's a saturated market. It's not a bad market. It's a very good market, but it's a very competitive market. And if I look at it from a return perspective, one dispensary in New Jersey, if you look just on an absolute basis, simple math, is worth 5 to 7 dispensaries in Florida. So if I'm going to put dollars to work, I'm going to put it to work in a market where I can really generate that cash flow.
Interesting. You want to ask something?
Yeah, I was going to say with obviously one of the things that stood out was the gross profit for the quarter. We're seeing it was down year over year. I think upon second look at that, a lot of it could be attributed to the Cresco acquisition. I mean, so that was a big knee-jerk reaction from a lot of retail investors. They saw the number, they were like not really giving it rationalization, but just went right after it. I mean, what's your comment in regards to that?
A good point, right? For them. Explain like what's.
I think the most important message you can take away from the way our business performed in that context is that our profitability actually went up. So gross margin went down, EBITDA went up on a margin basis. And I think that anytime you can see that type of discipline on an operating basis, it shows you that what's happening at the top level is worth a look, but they're managing the business appropriately. Now, for the gross margin, look, we made decisions that were the right decisions at the time based on a transaction we thought was going to go through. We had a number of assets that were being sold independently. We thought the whole business was being sold independently. And now we need to fix some of that thing, some of that decision making, which is what you saw this quarter. You'll see a little bit more next quarter. But what it allows us to do, I think, is demonstrate in 24 a massive ramp in gross margin, right? So all of the scale that we're talking about adding.
Position, you feel confidently.
Very good. Very good. Because not only do we have a very clear line of sight on gross margin, and I'll give you an example. 500 basis points of gross margin relates to absorption accounting, which means we have underutilized cultivation assets because we built out in anticipation of this changeover to adult use. That's happening now in Ohio. That's happening now in Virginia. We believe now that the legislature's changed hands. That's happening right now in New York. So all that capacity that was effectively pre-funded was very expensive for us to maintain, but it's the coiled spring that's going to drive profitability and growth going forward.
I was going to say, this is the TDR Traded Black podcast on the Benzinga Television Network. I'm your host, Shad Dales, Nicolas Vita from the Cannabist Company Holdings, along with Anthony Barrow. Good to see you guys. We were in Brooklyn, New York. Great spot, by the way. Look at this dispensary. And we got to show this, and we'll actually film more of it and have that posted for next week. But great location.
Yep.
And let's bring up the beautiful topic of New York, where we're at right now.
No sleep till Brooklyn. Look, this is the cannabis capital of the East Coast. Arguably, it's, you know, if it's not LA, it's New York. And I know everyone loves Florida, but New York is really, you know, this is where you go. The fact of the matter is that the state started accepting applications last week. We submitted ours to be a dispensary operator co-located for adult use and medicinal, and a wholesaler. There are going to be a lot of new dispensaries coming online. They don't have supply. We will be able to meet that supply.
Interesting.
They're going to have, you know, it's 25 million people, and you know, everybody knows the cannabis market in New York is huge based on the illicit market. Imagine if you could do something that's regulated.
Are we seeing change in the right way?
We're starting to. You're starting to see enforcement, which is really important. Not in a way that criminalizes bad behavior, but basically creates massive financial disincentives.
Yeah.
So they're going after the landlords. They're going after operators.
Well, Anthony and I, we were here, what, in August?
Yeah.
I haven't seen as many black market dispensaries walking around town.
No, I think that, I mean, luckily for everybody involved, I mean, we're seeing a decrease in the number. I mean, we walked a considerable, probably 3 miles in Manhattan last night. And I turned to him about 2.5 miles in. I go, Shad, you know what I haven't seen? An illegal dispensary. And I mean, it was nice. You brought up co-location.
Yep.
So I know you're a big operator in Colorado. I've seen some pretty wonky dispensaries in Colorado where you have to go to one part of the dispensary for rec, one part for med.
Yeah.
Has there been any sort of guidance as what the co-location will look like at the dispensary level in New York?
I think this is
It'll stay.
Yeah. So I mean, like the experience will be consistent.
Okay.
You know, we have to do certain things for the medical patients, which we will continue to do.
Okay.
But the idea is to make it a very seamless transition and to make it a very transparent experience for the consumer. But you know, every state has its own sort of clunkiness.
Yeah.
New York, I think, is going to get it right.
Yeah.
And I think that they're as excited as we are to get it open and up and running, because this is a massive opportunity for the state.
Yeah.
Let alone for the industry.
Well, you think, like we were talking about this off camera, with the amount of people that have moved down to Florida, you look at taxation dollars, here's a solution.
Yep.
Do you hear some of those conversations that's being had right now pertain to that?
They were very quiet and now they're very loud.
Yeah. I'm
Are
sure.
they?
Yeah. And it's being
They've gotten
exacerbated by
very loud, what, last 6 months?
Yeah.
Yeah.
because people are frustrated, right? They walk around the city. I mean, and this is just a microcosm because New York is a very big state.
Right.
But they walk around New York City, they see it everywhere. You know, there are people that are getting sick. I mean, you hear these horror stories about kids taking, you know, fentanyl-laced cannabis.
I know.
But that shouldn't happen,
That's
right? You hear about all of these, you know,
fentanyl-laced cannabis?
yeah,
I didn't know that.
yeah. In Maryland, they're public service announcements warning people about it. I mean, it's a real risk. So for safety reasons, for community reasons, you know, there are illicit dispensaries opening up right next to schools.
Wow.
Right? That shouldn't happen, right?
No.
I mean, you've got to be responsible in the way you open up and operate any business. And I think that the fact is that the industry wants to be regulated. They want to be collaborators with the state and the communities they operate in.
Yeah.
And I think they can do a great job doing it.
Yeah.
That to me, you know, from a cost perspective, I mean, you know, we have one of the largest operations out in Riverhead, which is our cultivation facility. It will be able to produce at scale, which is going to be much more price competitive than the illicit market, much more quality competitive than the illicit market. And so we'll be able to walk into anyone's storefront and be able to say, this is regulated, it's tested, it's good value. And by the way, these are the products that you actually are interested in. So they don't have to worry about a tainted supply chain.
I want to talk about consumer trends.
Yeah.
Transactions are up, basket sizes are down. Do you think a lot of reasons why basket sizes are down is because the times that we're in and inflation being high?
Well, it's two things. I think that people are definitely more mindful of what they're spending money on. But anytime you have an adult use transition, you're going to see basket sizes go down because transactions go up so much. You have people coming in more frequently, buying less per experience, and it's because they can come in whenever they want.
Right.
So it becomes less of a sort of a special moment and more of I'm just going to the supermarket. I'm going to get a dozen eggs. And so like we see that in every single market that we operate on. But
I think the key though is transactions are up. So what's that saying?
It says that the market is very strong. The fundamentals of the demand profile.
Right?
We're learning more. And I think every time you see that transaction volume go up, you're also giving the operators a chance to figure out what the consumer actually wants. So we can start making better products. We can start delivering better value. Yeah, that's exactly right.
Jesse.
Yep.
Love that guy.
There you go.
I hate to ask, but I have to ask. We've heard Schedule 3 on pretty much every earnings call. I know that we've spoken in the past, and we
Yep.
pretty much took a pretty conservative approach to it.
Yep.
So, I mean, what's your take on when we see any sort of movement?
Look, I hope I'm conservative on this. Unlike other federal initiatives, I think Schedule 3 is happening.
Yeah.
I think it has to happen because everybody's on board. Even the people that were concerned about it are on board. And there was a concerted effort to get uniform sort of viewpoints before they made that public.
Yeah.
So I'm thinking it's probably first quarter. If it's this calendar year, fantastic. Like there are a lot of rumors out there. There are a lot of activities and actions that we've seen happen that could point to an earlier sort of announcement.
Yeah.
But I think being conservative, it's all upside.
Yeah, I mean, Elizabeth Warren had a letter today.
Timing
For-
is too, right?
Yeah, I mean, it was her, Bernie Sanders, Cory Booker, all calling for FinCEN to be evaluated as it relates to marijuana.
Yeah.
Hasn't been touched since 2014. Timing is a little odd with them announcing this, but I mean, I welcome it. We need that more than anything.
Yeah.
And that could be a Hail Mary that, God forbid, SAFER doesn't get passed, and we really don't get the financial reform that we need with Schedule 3. Something like that can make it happen.
Well, I'll tell you what was really interesting. Like if you looked at the latest election cycle, the Democrats did exceptionally well.
Yeah.
So the fact that you've got leadership in the Senate coming out, taking a very strong position with FinCEN.
Yeah.
Right now we've got the executive branch basically saying Schedule 3 is coming.
Yeah.
All of the sort of the administrative elements are in place. If the House changes hands next cycle,
Yeah.
right, I don't think we need SAFE if we have FinCEN reform
Oh, no.
and we have rescheduling, because the states have the regulatory structure in place. So you've got the FDA making sure everything gets done in a safe way, and let's call it a laissez-faire approach to regulatory oversight. The states doing what they're supposed to be doing, what they want to be doing, and then you've got the federal government that's created a really sort of attractive business environment, so that people can start making real investment in their businesses. They can start doing the things they need to do to sort of elevate the entire industry for the benefit of the consumer.
I find this interesting, the timing of all this.
Yes.
That's why people are speculating, asking if the DA is going to make this announcement. We're hearing, we don't know for sure if it's a yes, but we're definitely not hearing it's going to be a no.
Yeah.
But it's funny how you guys bring up this topic of Elizabeth Warren, among other things, and the timing of it all. So it makes people feel rather optimistic heading into the calendar year. But then what, 2024 presents, if we do get these announcements, what do we need to be mindful of as far as next steps, as far as what the industry then needs to do over the course of the next 12 to 18 months?
Well, let's look at it from three perspectives. Status quo. Most of the leading businesses are now cash flow positive. They don't need to tap into the capital markets to sustain their business operations.
Agreed.
Amazing, right? We all have embedded growth in our portfolio. We are, like, from our perspective, we've got Ohio, we've got New York, we've got New Jersey, we've got Maryland, we've got, you go down the laundry list, we're exactly where we want to be. So we feel very good about top line growth opportunities. We feel very good about scaling the operations that we have. That's wonderful. So status quo, it's a pretty nice picture because in and of itself against the economic backdrop that no one really knows about.
Yeah.
Sort of scenario two is you've got status quo and then you add on rescheduling. Yeah. Everyone's free cash flow probably doubles, if not more, overnight. Just because you'll have a normalized tax regime. You won't be paying, 40, 50% in taxes out of your gross margin. So you've got real opportunity to deleverage. You've got real opportunity to make investment. You've got real opportunity to consolidate. That's fundamentally good for the industry, fundamentally good for the consumer. And then option three is you've got 1, 2, and then you've got FinCEN, let's call it restructuring. Like it's game over. Then we have definitive access to the capital markets, and we're just like everybody else. All of a sudden, companies that are generating free cash flow, that have real top line growth, that have real margin improvement, that are trading at multiples that are less than half of the S&P.
Yeah.
Like you're talking about a massive increase in equity value overnight. And by the way, deleveraging all those dollars that are going to go into repay debt, like we've just done, cycles right back into the hands of the shareholders. So it's exactly where you want to be in a cycle from my perspective, because the downside is where you are, but with the prognosis pretty attractive. Yeah. The mid range, which is actually pretty high probability. It's just a question: is it fourth quarter or first quarter? Does it really matter? When it happens, you saw what happened to our stock. Our stock tripled. Yeah, and that was amazing, right? That type of pent up demand is out there, and it opens a door for a whole range of things. I mean, how many times have you seen people delever and repurchase shares at the same time, right? That's the type of cash flow characteristics you get out of a removal of 280E. So it becomes really interesting.
Touch on that, because I know in the last couple of weeks you've had some forced selling pressure.
Yep.
And this was announced basically your latest stories about the buying of your shares.
Yeah.
Maybe explain, you outlined that to Anthony and I previous to recording here, but where we're at with that,
Yep.
and what investors basically can, I guess, interpret or understand better that pertains to that.
Sure. So we announced, the company approved a share buyback program, and we announced that because one of our investors had a portfolio issue. It was a shame. One of the managers of the organization passed away, and when that happened, the regulators came in, basically forced a bunch of selling, and we got caught up in that. We weren't the only ones, but off the heels of that, knowing that there could be some additional sort of shares coming in the marketplace, we wanted to make sure that equity investors know we're there to defend the name, we're there to soak up that demand, and we're there to make sure that there isn't anybody monkeying around with our stock price, because it was a really awful situation. I think we've made the right steps. I think we're being proactive, and we have a tool in our toolkit that we couldn't have had during the transaction conversations with Cresco.
Well explained.
Yeah.
All this stuff going on with 280E and all this stuff, and you still have blonde, brunette hair, no gray hair. How do you do it?
Well, it's a wig. So that's, no, it's, honestly, it keeps you young, right?
Yeah.
It's like you're constantly on your feet. It's the most amazing job I've ever had. I'm really fortunate. I mean, think about it. Name one other industry where you can be an emerging market in the United States.
Yeah.
You can be part of a social change that has a profound impact on lives across the country. You can do something that actually can sort of intervene in the illicit market and repatriate those dollars into a good use for society.
Yes.
And you get to be a farmer, a manufacturer, a wholesaler, and a retailer.
Yeah.
You touch people from every background conceivable. It's the most fascinating business I've ever been in. Yeah, it's crazy.
Yeah. I think the key, though, is that, we're still in the early stages of an industry, but we're learning.
Yeah.
But now what's great is that this has been a political play as well. And the powers to be are actually starting to listen, which is why there's so much positive momentum and sentiment regarding the industry. And I think a lot of hope, really, is what we're seeing moving forward, don't you think?
I completely agree. And
we need action, though.
We need action.
We need action, because we've been here before. We just celebrated the 10th anniversary of SAFE, but now I feel like the action is coming.
Well, we've never had a sitting president instruct.
Correct.
So let's put it this way: HHS, I think, has the budget, which is about the same GDP size as the GDP of France. Right. That's a big organization.
Yeah.
Right. They're not taking risks. They're not making any moves without everyone else agreeing around the table.
Yeah.
And so the worst case scenario is that it takes longer.
Yeah.
But the fact is, you had a president and his team and his cabinet make this decision, and it's out there. So you really can't put the genie back in the bottle. Are there things that could cause delays? Sure. But the fact is, to your point, that waiting, that sentiment, that positivity that comes is part of the momentum that ends up getting you to a very positive place. And by the way, it also reduces the perception of risk amongst all of our counterparties, whether it's the banks, whether it's investors, you
that's
name
what
it.
we've been sitting on. It's the regulatory risk has been immense in the sector for some time now. But I mean, there's people that we've spoken to that think that the DEA decision is already there. It's already written. The Garland memo is sitting in a drawer, basically for rescheduling. I mean, we're hearing it from everyone.
Oh, the speculation was so high, right?
But I saw a TikTok about it.
Yeah.
Right.
TikTok's we got a whole other podcast.
No, I actually think that's, in my experience, limited experience working in the Hill, I can't imagine a senior member of any department coming out with a statement like that unless they knew they had buy-in from all the other constituents.
I mean, there was a Bloomberg article yesterday that said Biden needs to pivot to marijuana.
Yeah.
I mean,
look how it's polling.
It says above 70%, the latest Gallup poll.
I think it's important to notice our outline too, is that in the summer, I actually had a podcast with, remember Dana Rohrabacher?
Yeah, of course.
So Rohrabacher Blumenauer Amendment was introduced in 2003 and passed in 2014.
Mm-hmm.
So that's 11 years.
2003?
Wow. Yes. So think about it. You brought up safe banking 10 years. These things take time.
That's about right.
But we're an industry that was built on, especially from an investor standpoint, where your money, they feel, can triple overnight.
Yeah.
Because what was created 5, 6, 7 years ago. And I think in a lot of ways they want to taste that again. But
Look, I mean, the bright side is that you know that there are reasonable valuations out there based on other industries
Yeah.
that get you there. We just have to have the fund flows to justify the movement in multiples and the movement in stock prices.
Yeah. I don't know why we have this on the floor, but we got to get the thermos up. We show that. That's branding at its best. Put that up on camera.
This will be on my desk moving forward for the podcast. It actually will. So the Cannabist will have product placement through TTB moving forward.
And I pulled a brilliant move. I brought all this TDR swag, forgot it at the hotel room. So we will make sure that we get that over to you in 2 weeks at
MJ Biz, that's right. We'll see you there.
So before we go, what a great facility. We're actually, as I said earlier, going to showcase some of this in some of our other videos. But what can you say about this location? Is this a flagship dispensary for the company?
I mean, look, this is right in the heart of Brooklyn.
Yeah.
Right by the subway.
What's this classified? Brooklyn Heights or?
This is like ground zero Brooklyn.
Ground zero Brooklyn.
Yeah, I mean, you come to Brooklyn and you don't see this place, you're probably missing the message. But no, this was built with adult use in mind. It was built, as a cannabist. It was built with the expectation that New York would be a leader, not a follower in the industry. And we were wrong on timing, but I think we're right on theme and thesis. And when New York finally activates, and that could happen before the end of this year. They have our applications. And they're going to turn that around really quickly. I think it was very encouraging that there was an article out from the state saying that they had come to an agreement in terms to resolve the outstanding, messiness that was preventing the program from moving forward. So all of that is really, really positive. But it's indicative of the whole portfolio, right?
Yeah.
We've got New York, we've got New Jersey, we've got Maryland, we've got Ohio, we've got Delaware, we've got Pennsylvania, right? Like the states that we're in that are going to be moving the needle over the next 2 years are exactly where we want to be. And we've already built out all the infrastructure.
I'm just going to say, do you have plans to get more aggressive in the CapEx spend?
We don't need to.
Built out.
Yeah, we don't need to. I mean, that's the thing. Like, we spent a lot of money up front because we wanted to be there. We've seen people successfully execute on markets when they transition.
Yeah.
And, we didn't have scale in Illinois when it converted. But, I would be damned if we're not going to have scale in New Jersey, in Ohio, and New York, and Virginia. I mean, you go through the laundry list, like, we're there.
Yeah. Well, this is good. I think we had to do a good recap here where, look, you outlined your gross profit margin, not the number. I think you look at, yes, Florida, not your top five. You look at the other states that you are, and you're producing well. Colorado, stuff that you don't sleep on. And then the share buyback with the current situation, because I know the share price has got a little pressure as of late, but you've explained that. And really, in a lot of ways, kind of, I hope the audience gets a better understanding as to what some of the numbers and some of the latest earnings reports outline and get a better feel and a better understanding of the company report. So appreciate the feedback.
No, thank you. We're really excited. We think 24 is going to be an amazing year for the entire industry and for us.
Yeah.
We think the rest of this year is going to be very predictable. We're comfortable with where we are, and we're happy to see the changes that are happening at the state level, which is going to be the ultimate driver, the first driver of the industry. Anything on top of that is just gravy. And I think for us in particular, because we've had some technical issues on the stock side, with that overhang removed, I think we're a really attractive place to be, which is why the board kind of looked at the landscape and said, if we're going to be deploying capital, how do we generate the highest rate of return?
Right.
And we looked at ourselves first. So I think that's really important.
All right. Well, let's go have some fun in Brooklyn. See some of the sites in the lovely city of Brooklyn. What a cool little hip city. This place is really long ways. It's not.
Yeah. Looking forward to it. I couldn't tell you anything. I couldn't tell you anything about Brooklyn, to be honest.
This is cool.
We'll talk tomorrow.
Yeah.
Cool hip area, though, is it not?
It's awesome.
Yeah.
It's really amazing.
All right, Nicholas, appreciate the time.
Thank
Thanks for
you.
having us in Brooklyn. Let's do this again.
Thank you. Yeah, great to see you.
Yep.
Thank you.
Hey everyone, thanks for watching. And if you want to learn more about the emerging industries that we cover, then leave a comment below and let us know who you want us to interview, the questions you want asked, and the information that you want to learn. We want to hear from you. As usual, click on that bell for all notifications to get the latest information, share this video with your network, and don't forget to subscribe.